Civic duty is not optional, but essential. First, the Declaration of Independence established that all people are created equal. These are unalienable rights, not privileges granted by any government. Life, liberty, and the pursuit of happiness belong to every person by birthright. Second, the 14th Amendment guarantees equal protection under the law. No individual, no corporation, and no institution is above the law. When the systems designed to enforce accountability fail, it falls upon citizens to demand that accountability. Third, the Constitution does not enforce itself. It was written as a living framework that depends on active civic participation. When citizens stay silent, power concentrates. When citizens engage, democracy functions as intended. The core message here is clear. Silence in the face of constitutional erosion is not neutrality. It is complicity. We the people is not merely a preamble. It is a mandate for action. Every generation must choose to defend these principles or risk losing them. Civic duty means voting, speaking out, demanding transparency, and holding institutions accountable. It means treating the Constitution not as a historical artifact, but as a living contract that requires active defense. Paper Trail. Episode 5 of 14. The S.A.R. $47.3 million in suspicious activity. This episode focuses on a single document, a suspicious activity report, filed under the Bank Secrecy Act. The total dollar amount flagged in that report is $47,296,860. A suspicious activity report, or SAR, is a confidential filing that a bank submits to the Financial Crimes Enforcement Network when it detects transactions that appear unusual, structurally irregular, or potentially tied to illegal activity. Banks are required by federal law to file these reports. They are not public documents. The fact that this one exists in the public record at all is significant. In this episode, we walk through the SAR line by line. We examine who sent the money, who received it, what entities were involved, and what patterns the bank flagged as suspicious. Every claim in this episode is sourced directly from the SAR itself. $47.3 million. One document, one bank, one filing. That is what this episode is about. $47,296,860. That is the number at the top of a 29-page filing with the Financial Crimes Enforcement Network, FinCEN. On October 1st, 2019, 87 days after Jeffrey Epstein's arrest and 52 days after his death, TD Bank filed a suspicious activity report. One report, 25 subjects, $47.3 million in suspicious transactions spanning 4 years and 5 months, from May 2015 to August 2019. Every dollar figure, every entity name, every account number in this episode comes from this one filing. This episode is about what's in that report. What is a SAR? A Suspicious Activity Report is a mandatory filing under the Bank Secrecy Act. When a financial institution identifies transactions that may involve criminal activity, it is required to file a report with FinCEN, the Financial Crimes Enforcement Network, within 30 days. SARs are confidential. Disclosing the existence of a SAR is itself a federal crime under 31 USC Section 5318. Banks file them. FinCEN receives them. Law enforcement can access them. The public cannot. FinCEN receives roughly 4 million SARs per year from U.S. financial institutions. This is a massive surveillance infrastructure, banks watching for suspicious patterns and reporting to the government. Most SARs never become public. This SAR is public only because of Public Law 119-38, the Epstein Records Transparency Act, enacted November 19, 2025. Without that law, this document would remain sealed. And the SAR itself carries an important disclaimer. Its contents are, in the government's own language, unsubstantiated allegations of possible criminal activity, akin to confidential informant tips. That framing applies to every dollar figure and every entity name in the next 40 minutes. The document EFTA 01656524.pdf, a 29-page FinCEN BSAR transcript. That's a Bank Secrecy Act report. BSA reference number 31000155070501. Filed by TD Bank on October 1, 2019. The bank's review period covered 5 years, September 2014 through September 2019. The suspicious activity period, the window of actual flagged transactions, ran from May 2015 through August 2019. Note the distinction. The review period starts a year before the suspicious activity. TD Bank was looking at accounts from 2014. The first transaction they flagged as suspicious came in May 2015. In the pipeline, this document is stored as 29 rows in the bank documents table, 1 row per page. Every entity name, every dollar figure, every account number extracted from those 29 pages. 25 subjects. The SAR names 6 individuals. Jeffrey Epstein, 5.9 million mentions in the corpus. The primary subject. Leslie Groff, scheduler and travel coordinator, 427,000 mentions. She will appear again in the flight log episodes. Richard Kahn, HBRK Associates, sole authorized signer, 331,000 mentions. He controls 2 of the 7 TD bank accounts. Darren Indyke, estate attorney, sole signer on 5 accounts, 185,000 mentions. Between Indyke and Kahn, every dollar in this SAR flows through accounts they control. Bella Klein, HBRK Assistant Controller since November 1999, 49,000 mentions. 20 years managing the financial books. And Michelle Cipher, managing member of Harlequin Dane LLC, 426 mentions, the smallest footprint among the named individuals. 2 signers, 7 accounts. Indyke signs 5, Kahn signs 2. That's the control structure for $30 million in suspicious activity. The entities. Southern Financial LLC, 266,000 mentions. Known entity, LEI confirmed. Bank accounts at Deutsche Bank, TD Ameritrade, and Pershing. A vehicle with presence across 3 financial institutions. HBRK Associates, 104,000 mentions. The hub entity. 2 TD bank accounts. Every entity in this SAR connects to HBRK through either Indyke or Kahn. Moving down. Avaloop, Aviation Services, 41,000 mentions. Southern Trust Company, USVI, 39,000. NES LLC, the entity that holds 9 East 71st Street, 23,000. Butterfly Trust, 11,500. The subject of Episode 4. Harlequin Dane, 2,000 mentions. DKI PLLC, 979. Birch Tree BR, 121. FT Real Estate, 69. And then 29. Representation Trust, Black Bag Media, 29 mentions each, 29 pages in the SAR. These entities exist only in this document. The gradient, from 266,000 to 29, from pervasive corporate presence to entities that are visible only because one bank filed one report. Source check. The SAR is document EFTA 01656524 in the DOJ corpus. It appears as 29 rows in the bank documents table, classified as SAR narrative. Verification. BSA reference number confirmed on the cover page. Filing institution TIN matches TD Bank. All 25 named subjects confirmed in the pipeline's entity table. The NER system extracted them independently when it processed the document. Ghost entity verification. Black Bag Media, 29 mentions. Representation Trust, 29 mentions. The SAR is 29 pages. When an entity's total corpus presence equals the page count of one document, that entity exists only in that document. The pipeline confirms what the SAR implies. These entities have no footprint outside this filing. The Deutsche Bank exit. In Episode 4, we documented Deutsche Bank's termination of the Epstein relationship. The termination letter was sent December 21st, 2018. The SAR shows what happened next. Between February and May 2019, wires flowed from Deutsche Bank to TD Bank with memos that read, Close DB account, DKI PLLC, Indyke's law practice, transferred from Deutsche Bank account 42953707. Memo, Close DB account, $114,741, HBRK Associates, from Deutsche Bank 429537115, $347,000 plus $100,000 check, same memo. NES LLC, 3 wires totaling $578,000 from Deutsche Bank, one explicitly referencing Jeffrey Epstein in the memo. Southern Trust Company, from Deutsche Bank 441-29244, $200,000 to DKI PLLC for legal fees, $500,000 to HBRK, and on April 18, 2019, $2 million wired from Jeffrey Epstein's personal Deutsche Bank account to Indyke's IOLA account at TD Bank. The money migrated. The structure stayed the same. The names stayed the same. Only the bank changed. EP04 Bridge. In Episode 4, the pipeline classified 229,000 Deutsche Bank documents, among them 28 wire confirmation documents dated between February and May 2019, the closure period. In Episode 5, the TD Bank SAR describes inbound wires during the same period with memos reading Close DB account. 2 institutions, 1 event, 2 records. The Deutsche Bank wire confirmations were filed as part of the bank's internal documentation. The TD Bank SAR was filed with FinCEN as a suspicious activity report. Neither document was written to corroborate the other. They corroborate because they describe the same fund flows from opposite sides. The pipeline's own wire transfers table confirms 3 subjects active during the closure period. Butterfly Trust, $150,000, February 5th. Bella Klein, $4,847, March 21st. HBRK Associates, $5,161, April 25th. Independent verification from independent records. Source banks. The SAR identifies 6 external financial institutions feeding money into TD Bank. Deutsche Bank, 6 accounts. Southern Financial, DKI PLLC. HBRK Associates, NES LLC. Southern Trust Company, and Jeffrey Epstein's personal account. This is the bank that terminated the relationship in December 2018. These are the accounts being closed. Charles Schwab, 2 accounts. Southern Trust Company at 41224708. This is the largest single source in the SAR, sending $12.66 million to Indyke's IOLA account. And Southern Country International. First Bank Puerto Rico, 2 accounts. FT Real Estate and another Southern Trust Company account. First Bank is where the $3 million real estate transaction originates. TD Ameritrade, Southern Financial, $2 million to Harlequin Dane. Pershing, Southern Financial, $1 million to Harlequin Dane. Morgan Stanley, Bella Klein's trustee account, $1.06 million to Indyke Personal. 6 banks, 13 accounts, 10 source entities, all converging into 7 TD bank accounts controlled by 2 signers at 1 address. Fund flow, the complete picture. 6 source banks on the left. Schwab leads with $15.8 million, not Deutsche Bank. The Schwab account for Southern Trust Company sent $12.66 million to Indyke IOLA alone. Deutsche Bank $10.9 million across 6 accounts. First Bank Puerto Rico $3.2 million. TD Ameritrade $2 million. Morgan Stanley $1.06. Pershing $1 million. These flows converge into 7 TD bank accounts in the center. Indyke IOLA $14.66 million. Harlequin Dane $7.75 million. HBRK $4.7 million across 2 accounts. Indyke Personal $3 million. DKI LLC $415,000. Birch Tree BR $300,000. On the right, where the money went from TD Bank. Horizon Title Services $2.84 million for a house. Representation Trust $2 million 2 days before death. Black Srebnick $200,000 for criminal defense. Black Bag Media $100,000, destination unknown. Cash withdrawals $62,400. A female student $24,300. Walsh Surety $20,000 for a Liechtenstein Astalt. Many sources, few channels, specific destinations. The Sankey tells the story. The HBRK Hub, 575 Lexington Avenue, 4th floor, New York. Harlequin Dane, opened April 29, 2015. $7.75 million. Indyke IOLA, opened April 5, 2019. $14.66 million. DKI PLLC, opened February 6, 2019. $415,000. HBRK Associates, first account, opened April 18, 2019. $3.74 million. Second account, opened February 5th, 2019, $948,000. Birch Tree BR, opened August 23rd, 2018, $300,000. Indyke Personal, the oldest account, opened February 27th, 2004, $3 million plus. 7 accounts, 2 signers, 1 floor of 1 building, $30.8 million in suspicious activity. Note: 4 of these 7 accounts were opened in 2019 during the Deutsche Bank migration. The money didn't just move to TD Bank. New accounts were created to receive it. In episode 4, we saw this address on Deutsche Bank records. Now it appears on TD Bank records. The bank changed. The address did not. The signers did not. 575 Lexington Avenue, 4th floor. Let's map what was on this floor. HBRK Associates, the management firm. 2 TD Bank accounts, $4.68 million received. DKI PLLC, Indyke's Law Practice, $414,000. Harlequin Dane, an investment vehicle, $7.75 million. Birch Tree BR, $300,000. Butterfly Trust, named as a SAR subject, operating through HBRK. Avaloop Aviation Services, account 92451933373. But the SAR also shows what was closing at this address. The care of HBRK notation appears on the Deutsche Bank accounts being shut down. Southern Financial, DKI PLLC, HBRK Associates, NES LLC, Southern Trust Company, all at Deutsche Bank, all listed as care of HBRK, 575 Lexington. 1 floor, 11 entities, 2 banks, 1 closing, 1 opening. The address is the constant. The bank is the variable. Pipeline stage. This episode has no dedicated script. The SAR passed through the standard pipeline. Script 1 registered it. Script 2 transcribed it. Script 4 extracted entity names. Script 16 classified it as a SAR narrative. The NER system pulled out all 25 subject names, but the dollar amounts, the account numbers, the wire flow network, those were extracted manually. The SAR is a prose narrative, not a structured financial document. The Swift and Fedwire tag patterns that Script 16 uses for wire extraction don't match narrative text. This is the boundary of automation. The pipeline can identify the document, classify it, extract names. It cannot reconstruct the financial network described in 29 pages of narrative. That required a human reading the document. Key accounts, 7 TD bank accounts, ranked by suspicious wire volume. Number 1, Indyke's IOLA account, $14.66 million in 3 wires. IOLA stands for Interest on Lawyer Account, a trust account attorneys use to hold client funds. $14.66 million in client funds. Number 2, Harlequin Dane LLC, $7.75 million in 7 wires. Together, these 2 accounts hold 73% of all suspicious inbound wire activity in the SAR. $14.66 million plus $7.75 million, $22.4 million of the $30.8 million total. HBRK Associates, $3.74 million and $948,000 across 2 accounts. Indyke Personal, $3 million. DKI PLLC, $415,000. Birch Tree BR, $300,000. We'll look at the top 2 accounts in detail. Indyke IOLA, the largest single receiving account in the SAR, $14,657,830. IOLA, interest on lawyer account. This is a professional trust account. Attorneys use IOLA accounts to hold client funds temporarily. The New York Bar requires them. 3 inbound wires. 2 from Southern Trust Company Incorporated, a USVI entity, through a Charles Schwab account. $8 million in one wire. $4.66 million in another. That's $12.66 million from one Schwab account. The third wire, $2 million from Jeffrey Epstein's personal Deutsche Bank account, April 18, 2019, during the closure period. Where did the money go? The SAR traces 2 outbound wires from this account. $2 million to Representation Trust on August 8th, 2 days before death. $200,000 to Black, Srebnick, Cornspan, and Stumpf, the criminal defense firm. Memo, G retainer replenishment. That leaves $12.4 million whose destination is not described in the SAR. The account was opened April 5th, 2019, created during the migration, funded immediately. The SAR tells us what went in. It does not tell us where all of it went. The Indyke Purchase, $2,839,259.73, wired to Horizon Title Services in West Palm Beach, Florida. Memo, closing costs for 6030 Lilac Road. This is a home purchase. The buyer, Darren Indyke, the attorney managing the Epstein estate. The funding chain, FT Real Estate Incorporated, a U.S. Virgin Islands entity, held funds at First Bank, Puerto Rico. $3 million wired from First Bank to Indyke's personal checking account at TD Bank with the memo real estate transaction. From that personal checking account, $2.84 million wired to the title company. The estate's attorney purchased a personal residence using funds routed through the estate's corporate network. A USVI entity to a Puerto Rico bank to a personal checking account to a title company. The SAR flagged this chain as suspicious. The precision of the figure, down to the cent, tells you this is a real estate closing amount, not a round number transfer, an actual closing cost. FT Real Estate Incorporated, a U.S. Virgin Islands entity at 6100 Red Hook Quarter, B3, St. Thomas, banking at First Bank, Puerto Rico. 69 mentions in the corpus. The SAR shows one significant wire, $3 million to Indyke's personal checking account with the memo real estate transaction. That $3 million funded the $2.84 million home purchase on the previous slide. The same USVI address appears on Bella Klein's trustee account, on Southern Country International, on Southern Financial, and on NES LLC, a single registered office in the Virgin Islands serving as the hub for the estate's corporate network. 3 jurisdictions in one transaction. Virgin Islands registration, Puerto Rico banking, Florida real estate. The SAR maps this chain. The pipeline confirms the entity exists, 69 mentions, but cannot independently verify the account or the wire. Harlequin Dane LLC, $7,750,000, the second largest receiving account in the SAR. The timeline. The TD Bank account was opened April 29, 2015. Harlequin Dane LLC was incorporated August 14, 2018. The account existed for 3 years before the entity was formally incorporated. Indyke is the sole signer. Michelle Cipher is listed as managing member. 2,000 mentions in the corpus. The funding. All $7.75 million came from one entity, Southern Financial LLC, but through 3 different banks. $4.75 million through Deutsche Bank, $2 million through TD Ameritrade, $1 million through Pershing, one source entity, 3 financial institutions. Where did the money go? The SAR shows $221,050 returned to Southern Financial at Deutsche Bank. Memo: loan payments. Paid between May 2017 and May 2019. Other outbound destinations suggest real estate and luxury spending. Seaford Avenue Capital in White Plains. Signature Title Group in Boca Raton. JR Watersports in Boynton Beach. JetSmarter, a private jet membership company in Fort Lauderdale. $7.75 million in, $221,000 returned, $7.5 million spent or held. The SAR does not trace the full outbound picture. Birch Tree BR LLC. $300,000 across 2 wires. Incorporated August 14, 2018, the same date as Harlequin Dane. Account opened 9 days later at TD Bank. $200,000 from Southern Financial through Deutsche Bank. $100,000 from Southern Trust Company through First Bank, Puerto Rico. The same funding entities, the same banks, the same signer, Indyke, a smaller version of the same pattern. 2 additional flows worth noting. First, the Southern Financial return. Harlequin Dane sent $221,050 back to Southern Financial at Deutsche Bank, characterized as loan payments between 2017 and 2019. Money flowing back to its source with a label. Second, Roadruck Investigations, a private investigator in Miami receiving checks from both Birch Tree BR and HBRK Associates, 2 different Epstein-linked entities paying the same investigator. 121 mentions of Birch Tree in the corpus, minimal presence. But the cross-entity payments to a private investigator are noted by the SAR. The Liechenstein Wire, $20,000, from HBRK Associates at TD Bank to Walsh Surety, a law firm in Vaduz, Liechtenstein. Memo: retainer, purchase of shares Astalt. Walsh & Surety specializes in Liechtenstein foundations, trusts, and corporate structures. The memo tells you exactly what the wire purchased, an Astalt. $20,000 is small compared to the millions flowing through the other accounts, but this wire doesn't move money, it creates infrastructure. An Astalt is a structure, and once created, it can hold assets indefinitely. This is the 5th jurisdiction we've seen in this SAR: New York, USVI, Puerto Rico, Florida, and now Liechtenstein. The money moves domestic. The structures span continents. What is an Astalt? An Astalt, German for establishment, is a Liechtenstein legal entity. It has no shareholders in the traditional sense. Founders' rights replace equity ownership. There is no public disclosure of beneficial ownership. The entity can hold assets indefinitely, real estate, securities, bank accounts, governed by internal bylaws, not public filings. The key distinction: unlike a trust, which requires a trustee and named beneficiaries, an Astalt can exist with a single founder and no disclosed beneficiaries. The founder controls the assets. The public sees only that the entity exists. The $20,000 wire purchases this structure. Once created, the pipeline cannot trace what assets the Astalt holds. This is the edge of the map. Jurisdictional architecture. Step back. Look at the geography. The SAR reveals a 5-jurisdiction structure with each location serving a specific purpose. U.S. Virgin Islands, entity registration, 6 entities at 1 address. The USVI offers no state income tax on locally sourced income and Economic Development Commission incentives of up to 90% tax reduction. This is where you register the entities. Puerto Rico, banking. First Bank Puerto Rico holds accounts for the USVI entities, a U.S. territory with access to the U.S. banking system. New York, operations. 575 Lexington Avenue, 4th floor. HBRK Associates, DKI PLLC, the investment vehicles. 7 TD bank accounts and 6 closing Deutsche bank accounts. This is where the money is managed. Florida, spending. Horizon Title for real estate. Signature Title Group, JR Watersports, JetSmarter. South Florida is where the money becomes tangible. Liechtenstein, asset shielding. $20,000 to create an Astalt. No ownership disclosure required. This is where assets can disappear from public view. Register, bank, operate, spend, shield. 5 jurisdictions, 1 network. Documented in 1 SAR. Pre-arrest compressed timeline. Watch the acceleration. May 7, 2015. The SAR's first suspicious activity. 1,521 days before arrest. 4 years of activity. August 14, 2018. Harlequin Dane and Birch Tree BR incorporated on the same day. 326 days before arrest. December 21, 2018. Deutsche Bank terminates the relationship. 197 days. Then the migration begins. February 5th and 6th, 2 new TD Bank accounts opened. April 5th, the IOLA account. April 18th, another HBRK account, plus a $2 million wire from Epstein's personal Deutsche Bank account. 4 new accounts in 79 days. The cash withdrawals, February 1st, 4,400. April 22nd, 8,000. May 7th, 50,000, triggering a CTR, 60 days before arrest. June 14th, tuition payment for a female student, 22 days before arrest. July 6th, arrested. Then, 200,000 to criminal defense lawyers. August 8th, 2 million to Representation Trust. 2 days later, August 10th, dead. August 29th, last suspicious activity. October 1st, SAR filed. The timeline compresses, the amounts escalate. The final wire is the largest. Pre-arrest. Richard Kahn made 3 cash withdrawals from the HBRKTD bank account. February 1st, $4,400. April 22nd, $8,000. May 7th, 2019, $50,000 in cash. The $50,000 withdrawal triggered a mandatory currency transaction report. Any cash transaction over $10,000 requires this filing. Kahn withdrew 5 times the threshold. May 7th was 60 days before Epstein's arrest on July 6th. Now compare this to Episode 4. The NYDFS consent order documented Attorney 1, widely understood to be Indyke, making 97 identical cash withdrawals at exactly $7,500. 97 times, $7,500 each time. Total, $727,500. Every withdrawal below the $10,000 reporting threshold. That was structuring, a federal crime under 31 U.S.C. 5324, designed to avoid the CTR. Kahn went the opposite direction, 50,000 at once, above the threshold. TD Bank filed the CTR. 2 members of the same financial team, 2 different withdrawal strategies. One structured below the threshold at Deutsche Bank. One withdrew above the threshold at TD Bank. Same network, different approaches, different bank responses. Pre-arrest, defense retainer. $200,000 wired from Indyke's IOLA account to Black, Shrebnick, Cornspan, and Stump, a Miami criminal defense firm. Memo: Je retainer replenishment. Je, Jeffrey Epstein. The wire memo abbreviates the client's name. The estate attorney's trust account replenishing the criminal defense retainer. Black Shrebnick appears in the corpus over 490 times across various OCR spellings. Cornspan, Cornapan, Comspan. Standard OCR degradation on a multi-word firm name. The chain. IOLA account, designed to hold client funds, paying a criminal defense firm for a client whose initials appear in the memo. Attorney trust account to criminal defense, the infrastructure serving its purpose. Pre-arrest, representation trust. $2 million wired from Indyke's IOLA account to an entity called Representation Trust in New York. Date: August 8, 2019. Memo: Legal fees. August 8th was 2 days before Epstein's death on August 10th, 33 days after his arrest on July 6th. Representation Trust appears 29 times in the corpus, 29 pages, 29 mentions. This entity exists only in this document. Compare it to Black Bag Media, the other ghost entity. Also 29 mentions. $100,000 from DKI PLLC, Arlington, Virginia. No public records found. An invoice, not legal fees. 2 ghost entities, 200,000 and 2 million. Both appearing exactly 29 times, matching the SAR's page count. Both invisible in 2.1 million documents. Both seen only because TD Bank filed this report. $2 million to a trust with no independent footprint. 2 days before the principal's death. The SAR flagged it. The pipeline confirms its isolation. Beyond that, this series cannot go. August 8th, 2019. 33 days after arrest, 2 days before death. $2 million, the single largest outbound wire in the entire SAR. From Indyke's IOLA account, the lawyer trust account that received $14.66 million, to Representation Trust, an entity with 29 mentions in 2.1 million documents. Memo: legal fees. The SAR covers 1,576 days of suspicious activity. The largest single outbound transaction occurs in the final 21 days. The SAR does not explain what representation trust is. The corpus has no other record of it. This series presents these facts without interpretation. The pre-arrest pattern. Step back from the individual transactions. Look at the sequence the SAR documents in its final months. Step 1. Cash. Kahn's withdrawals, $62,400, including a $50,000 withdrawal triggering a CTR, February through May 2019. Step 2. Legal. $200,000 to Black Shrebnick Cornspan and Stumpf. Defense retainer replenished. Memo: Je retainer replenishment. Step 3. Trust. $2 million to Representation Trust, a ghost entity with no corpus presence outside this SAR, 2 days before death. Step 4. Death. August 10th, 2019. Cash, legal, trust, death. $2.26 million in pre-arrest financial activity identified in the SAR. A caveat: the SAR does not provide dates for every transaction. This sequence is reconstructed from dates where available and narrative ordering where dates are absent. This is a pattern observation, not a causal claim. The series documents the sequence. It does not interpret it. Bella Klein, HBRK Associates, Assistant Controller since November 1999, 20 years, 49,000 mentions in the corpus. Klein was managing HBRK's books before the Deutsche Bank relationship began, through the entire 5-year banking engagement documented in Episode 4, through the migration to TD Bank, and into 2019. The SAR identifies a Morgan Stanley account in Klein's name as trustee, Bella Klein TTEE. From that account, $1,060,000 wired to Indyke's personal checking account at TD Bank, plus $82, a reconciliation transfer. But Klein's presence extends beyond the SAR. The pipeline independently verified her across domains. 2 FedEx shipments, March 2003 and January 2005. A wire transfer, $4,847 on March 21, 2019, during the closure period. FedEx records from 2003, bank records from 2019. 16 years of independent verification. The SAR confirms what the pipeline already knew. Klein is central to this network. Her USVI address, 6100 Red Hook Quarter B3, is the same registered office used by 5 other entities. Ghost entities. Black Bag Media. Arlington, Virginia. $100,000 wired from DKI PLLC. 29 mentions in the corpus. 29 pages of SAR. 29 mentions. This entity exists only here. No independent footprint in 2.1 million documents. Representation Trust. $2 million. Also 29 mentions. Also exists only here. Compare these to Roadruck Investigations, 130 mentions across email correspondence, including references to Steve Roadruck. Avaloop, 41,000 mentions. Seaford Avenue Capital, 32. Horizon Title, 89. These entities have independent corpus presence. The pipeline found them in other documents, not just the SAR. An important caveat: no public footprint does not mean criminal. It means unverifiable from this corpus. Black bag media may be a legitimate business with no presence in Epstein-related government documents, or it may not. The SAR flagged it. The pipeline isolates it. Beyond that, this series cannot determine. Female student payments. June 14th, 2019. $4,300 from the HBRK account to a credit institution for a female student. Tuition. A second wire. $20,040. Accommodation fees. The SAR describes the recipient as what appears to be a female student. The name is redacted. In Episode 4, the NYDFS consent order documented 120 wire transfers from the Butterfly Trust, totaling $2.65 million to women with Eastern European surnames. Stated purposes: hotel expenses, tuition, rent. Paragraph 31. 2 banks, 2 filings, same pattern. Tuition payments to young women through Epstein-related accounts. The Butterfly Trust wires went through Deutsche Bank. These go through TD Bank. The bank changed. The pattern did not. This series does not identify the recipient. Butterfly Trust Echo. In Episode 4, the NYDFS consent order documented 120 wires from the Butterfly Trust through Deutsche Bank. $2.65 million to women with Eastern European surnames. Stated purposes: hotel expenses, tuition, rent. In Episode 5, the TD Bank SAR documents wires from HBRK Associates. $24,340 to a redacted female student. Stated purposes: tuition, accommodation fees. The language matches. Tuition appears in both. Hotel expenses and accommodation fees describe the same category of spending. The pipeline's cross-domain synthesis confirms Butterfly Trust's presence across 2 evidence domains: bank documents and wire transfers. 2,190 events. $150,000 in the wire transfers table. A wire dated February 5, 2019, during the closure period. The Deutsche Bank relationship ended. The TD Bank relationship began. The purpose language carried over. 2 banks, 2 filings, 1 pattern. The USVI Hub, 6100 Red Hook Quarter B3, St. Thomas, U.S. Virgin Islands. FT Real Estate, the entity that funded Indyke's home purchase. Banking at First Bank, Puerto Rico, $3 million. Bella Klein, trustee, Morgan Stanley account, $1.06 million. Southern Country International, Charles Schwab, $1.66 million. Southern Financial LLC, the primary investment vehicle, LEI confirmed at this address, $7.75 million in wires through Deutsche Bank. And NES LLC, the entity that holds 9 East 71st Street, changed its address to this location in 2013. 1 address, 5 entities, 4 banks, $14 million in SAR-described wire activity. The U.S. Virgin Islands provides specific advantages: no state income tax on locally sourced income, Economic Development Commission incentives offering up to 90% tax reduction, and proximity to the U.S. banking system without U.S. state jurisdiction. 5 entities at 1 address, banking across 4 institutions on the mainland. Cross-domain verification. The pipeline's cross-domain synthesis engine, Script 25B, independently verified SAR subjects across multiple evidence domains. Jeffrey Epstein, 3 domains. 28,684 total events across wire transfers, FedEx shipments, and bank documents. $4 million traced. Ghislaine Maxwell, also 3 domains. 25,800 events. $6 million. Southern Financial LLC, 2 domains. 33,250 events. Darren Indyke, 2 domains, including 17 FedEx shipments. Butterfly Trust, 2 domains, 150,000 in the wire transfers table. Jege Incorporated, Indyke's law firm entity, 2 domains. NYS GLLC, 2 domains, 13 FedEx shipments. Financial Trust Company, 2 domains. And Bella Klein, 2 domains, 3 events across FedEx and wire transfers. Small numbers but independent verification. FedEx shipping records from 2003 and 5, a wire transfer from 2019. Different institutions, different years, same person. 9 SAR-linked entities verified across 2 or more evidence domains. 99.3% entity resolution rate. Cross-domain presence means the entity appears independently in evidence collected by different institutions at different times for different purposes. This is not circular verification. This is convergence. TD Bank filing delay. The SAR identifies suspicious activity beginning May 7, 2015. The SAR was filed October 1, 2019. That is 1,608 days, 4 years and 5 months of observed suspicious transactions before the filing. The Bank Secrecy Act requires institutions to file a SAR within 30 days of detecting suspicious activity. 30 days. TD Bank's review period, as stated in their own filing, began September 1, 2014, 5 years and 1 month before they filed. Note the timing of the Harlequin Dane account, opened April 29, 2015. The SAR's suspicious activity period begins 8 days later, May 7th. The second largest receiving account, $7.75 million, existed from nearly the first day of suspicious activity. The SAR was filed 87 days after arrest, 52 days after death, 33 days after the last suspicious transaction. The series does not characterize this delay as a violation. The regulation says 30 days per detection. FinCEN allows continuing SARs that cover extended activity periods. TD Bank may have filed earlier SARs on these accounts that are not in the corpus, but the dates are the dates. The first suspicious activity, May 2015. The filing, October 2019. 1,608 days. The audience can evaluate the gap. What did the bank know? TD Bank opened the Harlequin Dane account in April 2015. Within days, the first suspicious wires began. $7.75 million would eventually flow through this account, all signed by Indyke. 2016, continued activity. 2017, Southern Financial loan payments begin flowing back from Harlequin Dane. A return flow through an account the bank opened. 2018, Birch Tree BR and Harlequin Dane incorporated on the same day in August. New accounts opened at TD Bank. 2 investment vehicles, same signer, same day, same bank. 2019, first quarter. Wires arrive with memos reading Closed DB account. 4 new accounts opened in 79 days. A migration from another bank visible in real time. Second quarter. A $50,000 cash withdrawal triggers a CTR. 14.66 million flows into the newly opened IOLA account. Third quarter. Arrest, death, and a $2 million wire 2 days before death. The SAR's own review period starts September 2014. TD Bank states it was looking at these accounts for 5 years before filing. The question this series cannot answer: what triggered the filing? The suspicious activity or the arrest? The SAR was filed 87 days after arrest. The activity began 1,608 days before. The series presents both timelines. It does not assert which one prompted the filing. The regulatory gap. In October 2024, TD Bank agreed to pay $1.3 billion to FinCEN for systemic anti-money laundering failures. It was the largest penalty in U.S. banking history at the time. The combined penalties, FinCEN, DOJ, and OCC, totaled approximately $3 billion. The finding: $18.3 trillion in transactions inadequately monitored between 2014 and 2023. Systemic compliance failures across the institution. This penalty is not about Epstein. It is about TD Bank's broader compliance infrastructure. But the timeline matters. The penalty period, 2014 to 2023, overlaps entirely with the Epstein SAR's review period of 2014 to 2019. In Episode 4, Deutsche Bank paid $150 million to the New York Department of Financial Services for compliance failures during the period it held Epstein accounts, 2013 to 2018. 2 banks, 2 penalties. Both handled Epstein accounts during the penalty periods. Both found to have compliance failures. The Epstein accounts were not the cause of either penalty, but both banks were demonstrably failing at compliance while handling these accounts. The series does not assert a causal link. It notes the temporal overlap. Transparent science. Single source limitation. This entire episode derives from one document, 29 pages. Every dollar figure, every account number, every wire memo comes from TD Bank's filing. What the pipeline can verify. All 25 subjects exist in the entity table. 28 wire confirmation documents in the closure period corroborate the Deutsche Bank exit. Ghost entities are confirmed isolated. 29 mentions, all from this document. 9 SAR subjects verified across 2 or more evidence domains independently. The butterfly trust pattern parallel confirmed through pipeline data. What the pipeline cannot verify: the dollar amounts, the specific wire memos, TD Bank's account level details, whether the activity described was actually criminal, and what representation trust actually is. The SAR is TD Bank's assessment, not an audited accounting, not a judicial finding, not an independent investigation. The SAR's own footer, unsubstantiated allegations of possible criminal activity akin to confidential informant tips. Every dollar figure in this episode is a bank's characterization, not a confirmed fact. The pipeline measures what it can. Where it cannot measure, it discloses. Error log. Single source. All data from one 29-page document. The $47.3 million is TD Bank's assessment, not an audited figure. Ghost entities mean unverifiable, not criminal. The Indyke Purchase is SAR described, not verified against title records. TD Bank may have filed earlier SARs, not in the corpus. The TD Bank penalty is separate from Epstein. Temporal overlap only. One document, 25 subjects, $47.3 million. The SAR maps the exit, where the money went when Deutsche Bank closed the door. Into an attorney's escrow account on Lexington Avenue, through a Virgin Islands shell to buy a house in Palm Beach, through a Liechtenstein foundation designed never to reveal its owner, into two entities that exist nowhere else in 2.1 million documents. Visible only because one bank filed one report, 52 days after Jeffrey Epstein died. Next episode. 2,894 packages, the FedEx shipping network. 148 billed to Epstein's account by third parties. October 2005. All shipping stops. Who had billing access? What weighed 55 pounds? And why did everything stop?